So students, as you know, I'm sure you have gone through this pre-scene. So I'm not going to do a very long session, but about 1 hour, a very exam sensitive, exam oriented discussion on the pre-scene as well as other aspects of your syllabus. Uh, I don't know whether you can see me. I have switched on the camera, by the way. There's a black screen. So basically, what I will do is make you can ask any of the question, and you are sitting for a paper at an important juncture where there is a syllabus revision that is going to happen, and also there are a lot of developments, especially if you look at ABR is one of the challenging paper that you can see from the past results, right? So why I said this time examination is important. One is there are some significant regulatory development in corporate governance that if you really look at this case study, you can see examine is just indicating they are important when you look at some of the information in the case study. So there are new developments, especially from corporate governance risk management. That is point one. Point two, some of you may be unaware that those who understood that there is I am actually representing in this paper about 45% of the syllabus content, and there is Chamath will do another session, especially on the financial reporting aspect. So if you want to be the prize winner or very successful in this paper, and don't set a target to score 51, there is a greater chance you will not get 50, right? But set a target to score above 80, definitely you will get there. So for that purpose, if you only look at financial reporting and spending time to work on consolidation and accounting, there is a greater chance you will not pass this paper. So this is a very holistic paper. Right before I study the pre-scene, I want to ask some fundamental question about your readiness for the exam. Now, exam is, in very few weeks you will see the exam paper. So the best way to see your readiness for the exam is to see whether you have to look at the like examiner that how examiner would have already said the paper. I am sure CA is also facilitating by doing a pilot paper that will be, sorry, mock exam, which will be very useful for you to look at in light of these recent changes. Because before I get into that, let me remind again why this time exam is important. Reason number one, corporate governance, non-financial reporting, which is 15% of your syllabus, there are significant developments in Sri Lanka, especially listing rules that were applicable from this year, right, 2014, and the corporate governance code that was recently revised. So there can be questions coming from those changes. Number two, those who considered this as auditing part of this paper, now that CA again issued, and there was a recent syllabus revision done last year to remove reference to auditing standard and allowing you the chapters in the study text for true and fair view, internal controls, going concern, all of that as open book, meaning specifically to look at the risk from CFO's perspective. And look at the pre-scene, they have given a separate table on business risk. Why? Look at the pilot paper that was released 2 years before, focusing on risk perspective of this paper. I'm not talking for a pilot paper 5 years ago. There was a syllabus revision in SL1 for certain learning outcomes. Be aware about it. Right? Sometimes you may not be aware. So that by not being aware, don't be surprised if you get a different set of questions. The other third reason is there is a revision. Even in the next exam, you will see another set of major changes being tested, and I think that will come soon because Council has already adopted the IFRS S1 and S2. So those changes also will eventually come, right? But fortunately, this time exam, those changes will not come. Therefore, during next 1 hour, right, what we will deliberate is one, I'll spend few minutes to see your exam readiness, and then these slides I have carefully captured some of the salient point in the pre-scene which examiner could possibly connect, right? And our objective here is not to guess what question will come for the exam paper, but to be prepared for certain question, and obviously for you to write answers if you want to pass the exam. And like I said, to score above 70, 80, where you will definitely get above 50, that you need to really write answers by yourself. At least few papers. Have you done that, or are you just waiting to do this during the exam? High risk of failure, right? At least do 1 or 2 paper by yourself to see the confidence within a limited time you can quickly answer, right? And even in the books that you have as open book, do you know most critical pages where you need to necessarily open those pages? And have you seen those pages earlier, which enable you to write an answer within a very shorter period of time? Because in the exam, it's all about a challenge with a time period. Everything is time bound. For this section, you will spend about 1 hour. If you can answer these 40 marks within 1 hour, it's a great achievement, because there's another 2 hours for you to work out your consolidation related question and accounting standard. You see, there is 25% dedicated question on accounting standard. Another 25 question maybe on corporate governance, maybe on business risk. It depends. But this pre-scene, what question you could expect? I am covering both governance questions as well as risk question that could come. Risk of misstatement is another 25% of your syllabus. 25 plus 15, 40%. With ethics is 45%. That's how the syllabus comes. Then integrated reporting, non-financial reporting is still in the syllabus. So those have not been very much tested. Another thing you need to be aware that these are the last few exams in the syllabus cycle. Any LOs which are not tested, there is a chance those being tested. So those are some very sensitive information that matters to you. I hope you are aware that these open book new chapters which are available for you to refer in the exam, some of the new LOs that were introduced last year, I'm sure you are aware. If not aware, because some of you may be outdated, I'm sure it can be the case, some may be aware. So your readiness for the exam is to see, if you now look at my advice to you, don't look at any books if you are now aggressively starting your study. Some people are waiting to really start studies now. What can we do now? Start looking those LOs, especially last column of the LO. Do I have? I will show you now and prove you whether you have that knowledge or not. I can just ask you 2 questions. You ask from yourself, oh, am I ready or not? Have you learned that? Do you have that knowledge, or are you planning to read the books at the exam failure? Have you written any answers? So these 3 will be the key, and the examiner will set the paper by looking the first one, LO, and examiner specifically look at what topics can be tested under this LO, and then your role is to write the answer to meet the exam. This. So now this 15% of the syllabus, right? So this is the most extremely important 2-page that you should look at to get 45 marks, right? Now, specifically, if you look at even the last exam paper, past paper, examiner directly decided to test from the same wording this question, interaction between external auditor, audit committee in ensuring the effectiveness of audit. This type of question was tested in the last paper, right? What I want to show you, okay, let me take one example. Say if examiner decide to test on the board, see, out of this I'll take one, but unfortunately this doesn't capture some of the hot topics that I want to show. Instead, now I think if you have the syllabus, I hope, let me see whether I have another slide on the syllabus. Otherwise, please go and see if examiner, it's not in this slide what I'm talking now. If examiner wants to decide the board functions of the board. Now, are you aware about the 4 functions of the board in terms of strategy formulation, right? Monitoring, accountability, right? And policy making. Are you able to apply those 4 to a case study? That's the expected knowledge. And if an examiner tests that particular LO, which is not here, unfortunately, this slide I haven't taken that. So likewise, see if examiner wants to still test integrated reporting or non-financial reporting, are you able to really do that, right? So that's where you need to begin with LO, right? Let me go back and see. I think there is one slide. I wanted to show you that full thing, which is not here. Now, before I get into the case pre-scene, right, study, please make sure there is another page like this on corporate governance. Board of directors, there are at least about 3 LOs, right? About the board functions, board effectiveness. So those are very, very critical. So please go through, especially this last column called specialized knowledge. Have you read those chapters? And in the new corporate governance code, certain pages prior to the examination. If you are given a case study, are you able to apply? So during this session, I will propose several questions you need to write down. Like if I am the examiner, the questions that I would test from the pre-scene and try to write down the answer. That's the best thing you can do, because I told you your success is all about writing by applying those special knowledge or specific knowledge in the last column. So this is the first test you need to do if you want to pass the exam. Take the entire sets of learning outcomes, look at the last column, and then look at this action verb. When they say evaluate, it's about, now this one 4.3.3 says evaluate functions of the board. Now what I said previously, which is not in this slide, which I don't have the syllabus document now, but I remember it may be 4.3.2 where it says evaluate the 4 functions, right? The role of the boards, something to that effect. And if you look at the last column, it talks about the 4 things that I mentioned. Right, so then you need to really understand that and then apply that to a case study, right? So that's the challenge before you. And now it's a very good opportunity to look at this pre-scene and see if any of these learning outcome, if you were to answer from the pre-scene, how would you answer? Right, so that's what we will do. Before I go there, I will also spend a little time for you to flag, because this particular paragraph, now please open your pre-scene and look at this paragraph, right? What they say, QEP has gradually implemented governance principle to comply with SEC. Did you see this sentence in your case study? Right, now this is given in a context where in Sri Lanka now major sweeping changes being made. That entire older section 710 has been replaced with a new section called section 9, right? Section 9 of corporate governance with many changes. Some of those changes are stricter than the CA code. So remember, your case study is a pre-scene. If an examiner wants to test these principles, right, what are those questions and how would you answer and how would you apply them to the case study, right? So from that perspective, hi, I told this at the start. Date taken it. All right, sure. Yeah, I'll give that message. So in terms of the listing rules, right? So be well aware that some of these things, is applicable, and now itself you can write down the answer. So I'm not going to go through all of this. This is a very high level summary visually about those major changes. Especially there are new sets of policies that need to be there to comply with listing rule. So what are those policies? Please make a quick notes now. For example, the policy on the board of directors itself. It's now new committee is called not the nomination committee, nomination and governance committee. Can you see here 9.11? So that's called nomination and governance committee, right? So there should be policies on the ESG, policies on the risk management, and policies on the anti-bribery and corruption, policies on whistleblowing. Now, this policy framework comes in, big change, documented policy and implementation of those policies. And very important thing, fitness and proprietary, which was applicable for banks by central bank. Now that is brought into, and is there in many other countries. Right now, in your case study, there is a question about these directors. Can any students use the chat and tell me, are there concerns in the case study relating to fitness and proprietary of a director, which is likely to affect the listing rule? Can I get some response from the students? Let's see how sensitive you have read the case study. Anyone? Any comments? Let's see the chat. Your line is breaking. So I hope you can hear me, right? This comment came at 7:42. Is my line breaking or are you able to hear me properly? It should be okay, right? Is breaking. So, Aruna, are you able to hear properly? So there are some comments saying, let me switch off the camera and see. Uh, so are you able to hear me now? See, still line is breaking. Okay, now. So I asked you a question, students. Did you notice any particular information in the case study that connects to fitness and proprietary of directors? Fitness. What do you mean by this fitness and independence? Independence is a broader topic. Non-executive chair is getting very good. One student has noticed that, right? Now, those things you are very sensitive information. Yeah, age, because now age is a criteria even to be independent, right? If you look at one of the new criteria for independence is the age, and they have given you the age. And not only that, it connects to fitness and proprietary criteria. So good that you are aware, some of you at least, some I'm sure may have missed those. Those are little points but matters. Then can I ask you another question in terms of board committees? What are the gaps that you saw in your case study? There are gaps. Use the chat and write. So then there are changes to independence criteria which you need to be mindful. And I will ask you the committee question again, and some of these requirements are applicable from 1st October, some were already applicable from last year. This policy matter which I previously spoke, whatever I emphasize are in bold colors. Those are new policies that were kind of not previously prominent. The whistleblowing, anti-bribery, corruption, a very hot topic now coming is Data Protection Act. So some of them, this case study specifically is a company that aggressively deals with personal data. So therefore, data protection is another area that can be tested from governance perspective and cybersecurity perspective. Those are the questions that you could anticipate. I'll discuss more about those questions as we go along. So regarding this policy matter specifically, policy applicable for board, it talks about CEO and chairman. Now in this company, I have a one slide on this case study, applying corporate governance requirement that will be very useful to you. Before coming there, listing rule, because I am putting more emphasis on listing rule number one. This is a listed company, so the listed rules are mandatory. So whereas CA code is voluntary, so therefore you need to be well aware about possible non-compliance with listing rule, as well as new requirements in CA code. If examiner specifically narrow down the question to I don't think so, CA code, then you need to be aware. So listing rules very clearly says now CEO chairman you may combine, but remember there is a market announcement and you need to appoint a SID. The SID will have or should have power like a chairperson to deal with conflict of interest. Now whether that power is there, oh, your case study, do you know, is there a SID? So those questions you need to be well aware. And then right now, by looking at the board, what is your comment on the adequacy of board diversity in terms of the gender, skill and competence? Is there anybody in the board with the IT literacy, because their business model primarily deal with digital business model? So those are innovative corporate governance thinking rather than just commenting on the number of directors, etc. There are a lot of rich topics in your syllabus regarding corporate governance. Be aware about those other than the typical topic like how many members should be independent. Those are very basic corporate governance question, right? So these are those policy matters. And then if you look at the minimum directors according to the listing rule, minimum 5 directors, minimum number of independent directors should be there, and they specify as 2 independent directors at least, and out of those 2, 1/3 should be independent. Whereas CA code talks about 3 non-executive directors, right, of which If there are three, all three should be independent. Otherwise, 2/3, right? 2/3. Whereas listing rule demands for two independent directors. So in your case study, what is your comment? I have a slide on your case study, then we will discuss there. And this is the bigger change about the independence of the non-executive directors. Again, a very summarized view of the independence. The biggest change is if any director has reached age of 70, that's the question on the independence. And then 10% shareholding and other basic things, you know that any employee in the company who worked for 3 years cannot be independent, and close family members. Now you see in this company, the close family members, the father, brothers, so chairman of the company so if chairman is not independent, what are your comments? I'll get into those more specifically, but now my emphasis is for you to be aware about this listing rule, students. Please remember, examiner can either give you a separate 25 marks question on governance and internal control, or maybe something like going concern, right? Or examiner can test corporate governance as a part of your pre-scene. Whatever it is, be aware about these changes is my request to you. And see if director is 70 years, the independence is lost. And then CA code, more specifically, you see here CA Sri Lanka, this is a CA code, the variable remuneration, right? And then earlier, some annual report, they say, this director, actually, they have violated some of these requirements and they justify, however, this director is independent. Now, you can't have a comment like this. Now, only exception company can justify is this 9 year. If say director is 11 years old, but still company has a case to say he is independent. Other than that, you cannot give any justification as to why independent director who is not independent is acting as independent, right? So that's on the independent directors, right? And then I think this repeat we discussed. Now this is another important slide that I really summarized on all the committees. Now, let me ask this question. Let's look at your response. What are the problems in your case study regarding the board committees? Yeah. Yes, students, I will share the presentation. So can you give me example of a gap in your case study regarding board committees? Let's say who will get this question. Please be interactive. You can even talk. The more quickly you explain. I asked about the board committees, not chairman. Do you see any gap about the board committees of this case study? Very good. Now those are the students who have studied well, right? You can. No. This is not a board balance question. I asked question about the board committee. Now one student says risk committee. Risk committee is not a mandatory committee. Silent about members are very good. Related party transaction review committee is not there. So those are the questions. Good. But risk committee is not mandatory, right? So that's why you need to be well aware how risk can be handled. Because for the first time, both listing rule and CA code have brought risk management. Now, how to do it? Even risk corporate governance code CA, if you look at in detail, it gives even the framework, everything for risk management. But which committee is going to do? That can be a separate question if examiner wants to ask. If board wants to bring risk management, because your pre-scene has a separate para on risk management, how they would wish to do that? Is it through the audit committee? Is it through the risk committee? Is it through the entire board? What are the options available? Is a possible question to ask. So one gap in your case study is related party review committee is not there. Examiner can ask you a question because the both new corporate governance code and listing rule has specific new requirements on audit committee. I will deep dive and show you them. And then another interesting question, I want to ask you this question. Now this company has a parent company and subsidiaries, right? Should they have separate committees for subsidiaries, or can you manage with the parent company's committees? What is your answer? Let's see whether you know this answer. Whether each subsidiary requires separate committee, or can you justify parent company's committee? Quick answers, otherwise you have to take your own time. If you answer my question with parent, is it okay? Any students who disagree, who says subsidiary company should have a separate one? parent can, okay, with parent, right? Not always, right? So there are, yes, you are correct, but then you need to be aware about that particular clause in the listing rule, right? I'll cover that. So these 4 committees should be there. And remember, another major change is chairperson of the board cannot be the chairperson of board committees. A very, very important point. Now, if you look at company's chairman is chairing the remuneration committee, that's not acceptable, right? Then all 4 committees, there is a common thing I'm summarizing in this particular box. Look at common for all the committees are these. What are those? 1. Independent director shall be appointed as the chairperson every committee and comprise of 3 directors. In those committees, out of the 3, 2 should be independent. Very clear. This is the listing rule for all 4 committees in summary. Right? So 3 and 2 and the chair to be independent. And then this is another change, students, be aware now it's called nomination and governance committee. Why? Because we spoke about the listing rule talks about many new policies, and in Sri Lanka one of the hot topic now is the data privacy. It's a huge topic if you look at practical in the corporate world now. How? Because that particular act talks about appointing data compliance officer, integrate that to the governance, which committee is going to take over this data protection part, what is the role of auditors, right? What are the penalties, how it could impact the, so those are all governance topics because it comes to internal control. Even examiners from COSO framework perspective, how information system controls protecting personal data. So that's how you need to connect the syllabus to the current topics, right? So there are many ways that you can connect and you should be mature enough to do that connections. So here, why this governance word has come to nomination committees, that they have to now responsible to have make sure that these policies are there, policies are reviewed, directors are properly evaluated before they are onboarded. That's why this has come. And especially those red points are the new points, right? So this governance committee now should look at the overall governance framework of the company, look at the policies, review them and so on. Right. And then CA code specifically talks about the composition and annual evaluation, 360-degree evaluation of directors. That's for your knowledge. And then I don't need to talk much. I will now come to case study analysis. So this is about the remuneration committee. You can go through this. I want to draw more attention to audit committee, which is a very sensitive syllabus topic. Now, this is the point I previously spoke. Please read. Now, this is the question on whether you need to have audit committee, risk committee separately. Remember, there is no mandatory requirement still to have a risk committee separately. It gives the option, even listing rule gives the option. So entities, if they don't maintain both committees, then audit committee can take over risk functions. Right. So what audit committee has a lot of new role to play in risk management. That's a big change you need to be aware because the audit committee is a hot topic in your syllabus, in many past papers, right? And this point is about the previous one, parent and subsidiary. I'm coming in a little while to your pre-scene. I have an interest in analysis of different questions that could come. And as I talk, I'll give you many other questions which is not in my presentation as well for you to prepare and write answers. Write answers. The best way to pass the exam is from the knowledge that you know, start writing within half an hour, 20 marks question. That's all. However much knowledge you have, exam is a time challenge with the time, right? And you can't just copy paste also, right? It's about application of knowledge. If action verb evaluation, if action verb is evaluate, you need to really look at the case information and connect your knowledge and write an answer which is very, very clear, right? Precise, concise. So audit committee, a lot of changes, right? So one is a risk management, right? So risk management part also can come under audit committee, or it can come under separate committee, or it can come under entire board, or entire board can take risk management responsibility if they wish to. So number 1, independent director shall be appointed as the chairperson of the audit committee, that we know. 3 director story also we know, 2 should be independent also, you know. But what is now new, the big topic now The audit committee chair should be a member of a professional accountancy body. If you want a very specific explanation of what is professional accounting body, ideally a member of IFAC. Who are the members of IFAC? CA Sri Lanka, right? And others. There are others, ACC and many others are recognized as members of IFAC. However, without professional, now in your case study, fortunately, there's a CFA, FCA, so that is not a problem for your case study. But point to be aware for your case study student is that 13 areas of responsibility for audit committee newly, and all 13 are not new, but those are very specific, right? Some are new actually. So that I am bucketing under 4 categories. One is a financial reporting responsibility of the audit committee, risk management, then internal and external audit. So if you look at specifically, audit committee has to review the accounts before board approve. Whether that process is in your case study or not, you can assess. And then audit committee's role on risk management to evaluate the risk process of the company, and then how they receive the assurance from management that internal controls are adequate, right? And then this is where I have summarized all 13 in one slide, right? So if you look at those, why some in red color? Because those are new changes to audit committee. So the policy need to be reviewed and audit committee should oversee the risk management. Of course, it was there, but now because I'm emphasizing because this is a risk role, right? And then review and assess the risk management process, including business continuity plan. And your case study has a case for BCP because that site, you know, was there was a failure in business disruption in your case study. And then corrective action plan to mitigate the risk, right? So these are the 13 responsibility according to listing rule. And this point I already clarified the risk management role of the audit committee. And then if I further deep dive, this is the most critical part for your syllabus, because your syllabus specifically talks about how the board oversight on financial reporting. Now, if you look at the listing rule, how they review the quarterly accounts, they specifically emphasize few areas. For example, the related party transaction in your case study is there, and then significant matters, judgment, unusual transactions in the company. Now, look at in your case study, what are those? And then any major changes to accounting policies, audit committee need to be aware, and then laws and regulation. Letter of resignation from external audit. Now that is another sharp area covered in the listing rule. Letter of resignation is the area why audit has given the resignation. See, if this test, this is very interesting. You know, if your praise the unseen says audit is going to resign, there is a disagreement. You need to comment how audit committee should look at it. Why? Right? So then about the risk management part, I don't go into risk framework, but now I will come to your pre-scene information. This is very important. Now, so far what we discussed, how do you connect to your case study, students? Now, this is your pre-scene. I'm getting to very sensitive, critical information only. Because my job is not to read para by para. You have done it already, no? So I need to really enable you to think, broaden your thinking horizon, connect to many learning outcomes. So make this a fantastic opportunity to review that entire 40%. Like I said, how to get above 70, obviously we'll end up getting above 50. So this company is listed, and case study specifically says they are preparing to adopt listing rules. And then Steve is the main man driving strategic thinking. Remember, strategic thinking is one of the board function in your syllabus, right? I said 4 functions of the board, 4 roles of the board, right? That is there in one page of the study text, these 4 roles. If you happen to explain, evaluate the 4 roles, then Mark is focusing on the IT part because predominantly they are in a digital business model is digital, right? Then obviously for financial reporting purpose, this is very important. They are going to acquire either City Hotel, another company, and you may ask whether they have audit committee risk management, how you integrate to this company's committee from a governance perspective. So these options are being evaluated as a growth strategy. And this is the slide where I apply this case studies findings to the corporate governance best practices, right? As you know, chairman is not independent, right? Patrick Pereira. And you can see 4 executive directors. Now you know the listing requirement, 3 and 2. Sorry, two independent directors, right? But if you look at this company, there are 4 executive directors, Mark and Steve, in addition, marketing and finance. 4 non-executive directors are there, 4 and 4, 9 directors. So what they don't have is the nomination committee, which we already noted. And the good news is audit committee is chaired by independent director. That requirement you can tick off. But are you happy with outsource internal audit function because the company has many issues being reported? Maybe you need to evaluate the effectiveness of outsource internal audit. Again, it's good that they are reporting to audit committee. Nomination committee is chaired by Callum, who is a retired banker. So look at the age requirement, things like that. There's a profile given in the case study. Please carefully go through. And about the risk management, they specifically talk about the board of directors and audit committee both, right, play an important role in risk management. The company has a ERM framework which helps to manage the ERM risk. Why this information examiner give examine? Now please write the first question that can be tested in your exam is, this question was tested in your recent pilot paper with the syllabus revision that was about 2 years before. How or evaluate how some of these business risks translate to risk of material misstatement. Can you write answers at least about 5 risks? I'm going to explain to you how to write that broadly, but start writing that today or tomorrow. Then you will be very comfortable about this 25%. Several chapters in the study text. True and Fair chapter talks increasingly about concepts of inherent risk, control risk, and how business risks connect, which is an open book chapter. Then you have another chapter on the COSO framework, primarily talking about 13 principles of COSO. Fraud risk assessment is another chapter in your study text, which is now open book. So those chapters give you information all about the risk of misstatement rather than auditing. So now are you able to identify those risks of misstatement from this case study and write the answer, which I'm going to show you, which is probably why, I don't know, examiner may wish to test or not, but the exam paper gives you business risk in a separate table. They convert that table to risk of misstatement. What are your insight? Look at the balance sheet and connect that numbers. What inherent risk reflected in the balance sheet? For example, if you look at intangible asset, probably that can be their whole digital asset module, the website, and how it is integrated, that whole IT asset base, how it has been amortized, all of that you need to look at, right? That can have a higher inherent risk, how it is being impaired, etc. So those are very easily you can pick up from the balance sheet. So risk management, I'll come to that more specifically in another slide. Then another area from your fraud chapter, which is a very specific learning outcome. If you read your syllabus learn, I'm all talking from my memory. Yeah, your revised learning outcome with the syllabus change done in last year says now, how you identify risk of misstatement? Number 1, from the COSO risk framework. That's where you look at inherent and control risk. Second thing is fraud risk factors. So those 3 fraud risk factors, fraud triangle, the incentive pressure, you should be well aware. What are the incentive in your case study? What are the pressure, business pressure from your case study? What are the opportunities in the case study? Can you give me one big opportunity for this driver's fraud? The driver can do that cancellation and then take the money out. Huge opportunity in the system. Very high risk is interconnected system. And in that context, ITGC, IT application control, play a big role in terms of internal control framework. Huge risk that you can certainly identify, which is given in the case study itself. So that's where IT control becomes fundamentally relevant to your case study. Look at the COSO framework, especially about the information system control, application and general. Similarly, such requirement applicable to Data Privacy Act, because Data Privacy Act is all about identify the personally identifiable information. What are the organizational control to do a data privacy risk assessment? In the Act says it's about, you can write this word, Act requires you to do the impact assessment of personal data and to have organizational controls and governance around the personal data. Which committee should do that? Because this is Act in Sri Lanka right now, which is, I think, indicated somewhere. So the cyber security to all of that. So now getting to this information, right? One information is overstated claim by the maintenance department. Why I'm asking now how this information can be connected by you. It was recently noted that there had been overstated claim by maintenance department. Once the maintenance engineer signs the claim, there is no, remember the one paragraph in the case study, they have a good ERP system, right? And that has been working, but this, after that, they say this problem. And specifically it says there is no way to verify material and quantity, right? Now, when there is a maintenance claim by an engineer, say this may be to repair their vehicle or something, because they have a distribution channel, own and drivers, third-party vendors, right? So finance department process the payment, but they don't have a method to verify the material and quantity issue. Now that is a fundamental deficiency. Please write the word. This is called internal control deficiency. That's the technical word. So why this internal control deficiency prevails? Was it inherent system weakness? Because it can't be, then you have to bring some additional control where you have to access why material and quantities not captured, why this was not highlighted by the outsourced internal audit function, right? So when this fraud was detected, it indicates there is a significant deficiency in the internal control in relation to the misappropriation of assets. Why? Because there are internal control deficiency where you can't verify the material and quantity. So what are your recommendations, right? So one is to fix this control, identify the root causes why this cannot be verified, and bring the required system control, or at least introduce a manual control in the absence of a system control to monitor the consumption of such material and internal auditor to review that process. That's the area. So if you were to do a fraud risk assessment, these are the fraud found, but what are the other fraud? The other biggest risk that you will write in this case study is revenue recognition risk. There are many risks, but one risk which is already given in the case study is that during the busy time, they pick up the order and then order is delivered to the customer, driver cancels the order. Again, the fundamental deficiency in the IT application control was allowing driver to that type of access privilege as to how he can cancel the order once the order is initiated. Right, that's a significant deficiency. The question mark is whether these internal IT systems have been adequately tested for what? Please write ITGC and IT application control. If you look at the COSO framework, there is a segment, one of the component is information systems, right? And then another component in COSO framework is control activities. What are the components of control activities? Please write how it is being authorized, SOD, segregation of duties, how information is being processed. Now what I talk, what it indicates, you are weak in terms of your knowledge component. So exam is not to memorize and reproduce, but at your level, on the verge of becoming an accountant, to a case study, how you connect this information and come up with a very smart answer without writing essays in bullet points. So what I'm trying to explain to you, the root cause behind this issue is primarily related to ITGC application control and access privilege. And those have not been monitored by internal audit. What is their current scope? And from fraud risk perspective, this is what fraud risk factor where there are opportunities for fraud. So that's how you connect this to the syllabus topic. Then the system identify journey is completed, but it requires driver's confirmation. However, there is no way of tracking the journey against the order. So then again, that's the inherent limitation by not having that facility in the system. So this allowed independent contractors to manipulate. So they were strictly advised on this and new controls. Now they say the new controls were introduced. Maybe now we have to review those new controls, right, by the internal audit because it's outsourced and ensure that the controls are robust, right? These are the things given in the case study as pre-seen. So unseen perspective. Overall, I'll cover the biggest, most critical slide that I will present will come in the following slide about the 25% of the syllabus talks about ROM, risk of misstatement. So that will appear in my next slide. Before we go there, another possible area that can be tested is a very, very hot topic in Sri Lanka right now with S1 and S2 adoption, as you know. So then in your syllabus, although S1 and S2 are not there, your syllabus still has sustainability, integrated reporting, GRI, all are there in your syllabus. If you examiner wish to test, even in corporate governance code, this part is newly written. Please go through ESG responsibility. Now, what do you know about what are the, please write this word, material topics. Now, we talked about material misstatement. It's good to have a board and know this and show. This is a very boring lecture where we have to just talk. It's all dynamic. If I can draw everything, I'll draw and show you how this connects. But write this word. For non-financial reporting, we don't talk about material misstatement, but the word is material topics. If you apply GRI standards, one of the material topic for this company would be carbon, right? The energy, because they use many deliveries, and data privacy is another hot topic for ESG perspective, right? So look at those material topics that connects to stakeholders. Stakeholder really worry about the food quality, food security, right? Maybe are they using child labor, forced labor, these drivers and all, right? And then carbon emission, which they talk about here. Carbon emission is a hot topic. Packaging, how it is being done. Food security. So these are material ESG topics. Why that could impact not your balance sheet, but stakeholder. That is why we use this word material topics in GRI because GRI is also in your syllabus. And if you apply integrated thinking or integrated reporting 6 capital, this company need to think how their social and relationship capital works to make money, because the relationship, you really look at this company facing a huge risk. Imagine if some of those restaurants says they don't want to work with this brand, then they are going concern. That's the risk to the financial statement. So from ESG perspective, integrated reporting perspective, draw this into please A4 sheet. This is how I apply integrated reporting framework to this case. There's one chapter in your study text. This is how I will apply GRI framework. This is how I will identify material topics. This is how I will apply corporate governance ESG part to this case study. That is the take on this slide. There are 3 learning outcomes on the non-financial reporting, 3 or 4. So before I proceed to the most critical part of the pre-scene, do you have any questions, students? I hope you can hear me. Can't see me. Can hear, right? If I switch on the camera, there is a disruption. Right. So now the most sensitive part that I want to discuss with you, the business risk, how it translates to audit risk. Right, so let me, meantime, any question you have, use the chat option so that we can discuss questions at early stage. So this is the most critical slide, which you can convert to many answers, right? Please don't look at the right side, right? So let me not look at that. I mean, now, if you look at the given information in the pre-scene, why examiner gives this risk and control? Because your syllabus is very much with the syllabus change last year. Idea is to look at risk from CFO's perspective, not to do audit. That is the APR paper. So now there's a syllabus change. I'm emphasizing that. That's why all the auditing standards were removed. Right? But auditing knowledge still relevant. What is in, because that knowledge is relevant because most CFOs are very good CFOs. They are trained on auditing, no? So auditing knowledge is critical. That's why those concepts are relevant. Risk of misstatement, inherent risk, control risk, those are syllabus learning outcome. Assertion level risk, financial statement risk, very much examinable. Those learning outcomes are still there without referring to detailed auditing standards. So from a risk perspective, this case study talks about, now you need to answer now from the chat. If you're actively listening to this webinar, please write, and I'm asking you one by one on this pre-scene, how this will affect my balance sheet and P&L or a notes. Consumer demand for food decline. So what is given below are the mitigations. Risk is only what is in black color, or bold. So to address decline in demand, they spend more money on advertising, heavy advertisement, customer feedback is taken seriously. Drivers are provided training to be, if drivers are reckless and talking to customers and doing a lot of unacceptable thing, problem. Keeps adding more menu, right? Some of these food companies say, it's been popular. Some of these companies, what happened? There are Sri Lankan cases, right? Now the question to you, will it affect your balance sheet? The first one, please give me the answer right now. Now we look at only the black color, bold one. Consumer demand decline. How it could affect your risk of misstatement or financial statement level, assertion level. Please answer now before I show in my right side, which is a very critical part of this discussion. I am asking you to give the answer, then you can be very happy your thinking is right. Please do now until I explain the next. Dependency on brand reputation of restaurant partners. Imagine if they have a partnership with bad restaurant, again it will affect the above one, right? The demand. Instead, what they do is there is okay now because they are dependency on brand reputation or restaurant partners, which means it's good to have very good elite group of restaurant as your base. So what they do is there's continuous monitoring of brand that they work with, and there's a process to provide continuous feedback. And I am connecting this with another one. Huh? Then you can look at the both. Look at the last one, restaurant. Now, while you are depending on for your brand reputation, or this is totally on now integrated thinking. Huh? This is called relationship capital. Right? Because your relationship with those restaurants are very, very important. And then if they are reputed, it will affect, you will also have a good brand image, right? And if you look at my cover slide, that's very similar to this case study. This actual company in Sri Lanka, there everything I can show you again that, and we will get this. So look at the last point, restaurant may terminate a contract with the company. Right? So then what will happen? They will say, no, we don't want to work with this platform. They are terrible. And payment or whatever issues. And they are not reputed. We don't want to associate. And then again, they have a risk mitigation to say company. Let me take the pointer. So these are mitigation. They have multiple ways to add value to these partners, relationship capital, and then they have a database. Even if they go, they have a rich database, right? Restaurant partner will have to spend a few years to develop something similar. This indicates another risk where restaurant partners will directly approach the consumers and bypass this channel, right? So anyway, my question to you, by looking at these two, how this could affect your balance sheet and P&L? That's the answer you might write from a CFO perspective if you're asked to do risk of misstatement, or a risk analysis for your financial statement. Remember, COSO framework. Now your risk of misstatement is based on the risk framework, not from auditing standard. If you read the syllabus learning outcome, the last column clearly. So in the COSO framework on the top, some of you, when I say COSO framework, what is the framework he's talking, then you are really in trouble. Huh? Please read, this is a chapter in study text. Control environment on the top. Below the risk assessment. Risk assessment is really this list. and to connect it to financial statement in the right side and say, look here, this balance is going to be overstated, understated, and this is overall risk and so on. Now I'm asking those answers from you. So I cover these two are connected. That's why I wanted to connect. Then the subject of data privacy. Why examine is bringing this data privacy is a really hot topic in Sri Lanka right now. You see the penalties, lot of governance, corporate governance. There is a separate section in this act called accountability, the board role, how it connects to the internal governance structure, everything. When a pre-scene is given, just be aware, at least to write something on this. Customers are communicated message relevant to the second. These are the risk mitigation, right? Customers are communicated message relevant to the security of their accounts. Nowadays, we get a lot of. Now you see, even if you go to a shop, everybody asks your mobile number. They can't even ask that type of information unless it is required. So the act requires employee consent, and you have to only ask the information which is actually legally required. Right? Oh, it is essential for the business model with a justification. Otherwise, you cannot even ask the information. Now, it's not only customer information, it is about your suppliers, anybody's personal details like the birthday or a phone number, right? Or your the sexual orientation or any physical health information. Those are personal information according to this act. Spend some time. I hope I have added 1 or 2 slides for your knowledge about this. Now, how this can connect to your accounts? The question. And now, risk of system failure, a hot backup site. What is a hot backup site? Right? It failed. And even now, this company had all of this mitigation, but it failed. Cyber risk, now this risk actually materializes, is given in the case study, and cyber risk expertise is available within the company. So my question to you from corporate governance, remember, if you haven't gone through, corporate governance code has a separate risk on cyber security management that has several requirements. Number 1, appointing a cyber information security officer. Number 2, what information board of directors are looking on the phishing attack to various cyber attacks and data protection, etc. And then, you know, how board is addressing them. Is it audit committee, risk committee? So those are corporate governance questions from this. From a balance sheet accounts perspective, I'm asking what are the risks. And finally, if there is a disruption, they are doing a risk country-wise disruption, then how it will affect. Now, I'll go before I show you the answers or the risk of misstatement. I want from you. Okay, now some students have written very good. Some of the answers, right? But are you connecting to my business risk? You can't just write answers, right? Now, when you say brand, okay, one question is internally generated brand cannot measure reliable. So, okay, so these are the answers from you. Some students have answered very good. I am happy. A lot of comments are given, right? I am overseas student, cannot purchase corporate governance book. What can I do? Can I take a copy? Wonderful. Yeah, that I think we will clarify that question. I'll ask CA to respond to you. Usually this book is, you don't need to. Yeah, we'll have to see, because even overseas you are doing the exam physically, right? So book, how do you get is your question. I think, yeah, this question I'll get CA to clarify this question. And then other answers, if I look at, remember, you have to take, can I take a copy of two? Yeah, books are available right now. You can purchase those books. I'm sure for overseas students, you should be able to. I think there should be a facility to get a copy and go for the exam. So we'll clarify that. So revenue is the question, but the question, students, now this is Chandima's answer, right? Chandima. Now you have to write this answer in 2 sentences or 1 sentence, 2 lines. Then only you are a sharp student. Then going concern, no point of just writing. How do you write going concern in 1 sentence? Because exam marks are given for your write up, not for the topic. Huh? So I hope you know how to write answer. That's why I said now, please write this answer. If this question is given to you with 15 marks, wow, you can quickly write. Because some past papers, if you look at, sometimes they don't give any unseen just from pre-seen. There are questions like that. But don't complain me if this is not tested in the exam. Huh? So like I told you, examiner may wish to test, risk of missile statement from pre-scene or unseen. You can give a completely new scenario, but still this knowledge is very important because you can apply to any case now. But now the beauty is that you have the information. If tested, you are in a much better position to score. So my question to you, please learn how to write the going concern, how to write the revenue. What else? Cut-off risk, how revenue, amortization of intangible, very good. But if I ask you what is the business risk, you should be able to tell me. For example, you might say that they are in a digital business model which has a higher chance of what? What is the unique inherent risk with a digital business model? They are being disrupted and the technology changes, right? So that's the business risk part of it. So accordingly, the asset that you have in the accounts as intangible, that's why it says you have to do this mandatory impairment testing. Right. Of course, if there are internal generated brand, if unseen says yes, you cannot capitalize. Right. Yeah. So those legal expenses, contingent liability, that's another good dance. How you connect contingent liability. Right. So now I will explain to you how these two columns can be connected. Look at carefully what I cover now. Now, I haven't written that answer now. I can now you can write down what I talk from now. If somebody wants to write revenue recognition in 2 lines, the answer that you may write in this paper is what? This is one answer to say overall financials. Now look at overall, you might say this as overall financial statement. This is how you may write. There is a possibility of overstatement of revenue because the company is under competitive pressure because there's a lot of competition in digital area. And remember, second thing is every company, there is a rebuttable presumption that there is always a risk related to revenue recognition. The second reason why in this company, the revenue recognition risk is prevalent, very important sharp point for this particular case study, because the revenue is captured through an interconnected information system. And the accuracy and completeness, including cutoff, totally depends on the point how accurately those information is captured when a customer places the order, customer confirms the order, and the driver does the delivery, at which points the performance according to 5-step process, performance obligation is discharged. This whole thing happens through the information system, and the given information suggests that there are weaknesses. So any weakness that's the control risk, students. So remember, there is an inherent risk because this is a complex interconnected system, and that has given rise to what? Fraud risk already. So that's how nicely you can put few bullet points under the overstatement of revenue, fraud risk. That's how you write the answer. And like I already told, impairment of intangible, look at the business risk first. The company business model primarily depends on a digital system, right, which is subject to technological obsolescence. That's a business risk. The relevant audit risk comes, relevant risk of misstatement comes in the adequacy of impairment testing because it involves subjective assumptions and judgment. That's your answer. Then about the data privacy, because of the act, if anybody wants to file a case against the company for misuse of privacy, then there are obviously reputational risks, the business risk. Then, like some students say, customer complaints will result in what? Contingent liabilities, provisions. If there's litigation comes, it is relevant. Now, regulatory actions, breach of data privacy or customer complaints. Then another big question is if there is a significant business disruption arising from termination. Now this is on the point of termination of contract. Let us say this company lost and most of the popular restaurants in Sri Lanka decide not to work with them because they are having a lot of issues and that affect those restaurant reputation. As a result, you may lose the business. And remember, then going concern, a very hot topic now because of the corporate governance requirement. Everything going concern again has come to the spotlight. So the going concern risk comes as overall financial statement risk if there is a business disruption, if there is a loss of this relationship capital, right, from an integrated thinking perspective. And then cyber, is overall financial statement. Just remember, because that can come with a cyber attack. And then, like I already said, highly integrated IT system which connects restaurant, couriers, and customer. Page number 5. The other obvious risk that we will talk about is a related party transaction risk. Like that, this, please do this in a one page, whether it is tested in your exam or not. That's a very good revision for the most critical chapter in your study pack, true and fair view chapter, as well as internal control chapter, and gives a very good coverage whether this is tested or not as a part of pre-seen unseen. Then about the cyber attack, which I already spoke in terms of business disruption, what they say is this, this did not function. 3-hour downtime is significant, maybe above the risk appetite of the business. All part of the system must work at all the time, but the investigation realized that when there's unusual traffic, this was down. And how it was impacted. Unfortunately, hot backup site was not working, and I have given you knowledge about what is hot. I am sure already you would have studied these things. This was the first time the cyber issue like this arose, and board decided what they need to be more pronounced. See, this is critical for you from corporate governance code. I can give you now question, please write. Explain the board oversight or audit committee oversight on cyber security risk and how it is integrated to overall risk management framework. Please write the answer. What is the board responsibility? Answer is there in the corporate governance code. Go to the section on the cyber security 1, 2, 3, 4. Please write the answer and connect to this case study. That's another question. So normally this type of attack is called distributed denial service attack from IT security perspective. And then what can you do to improve cyber risk management in the company in a case like this? Remember, there are multi-layered cyber system in organization. Please write that word, multi-layered. Many layers are there. Starting from the multi-factor authentication, you can't just log in. There are multi-factor, as you enter, you have to enter the code, then your main credential. You can't go to any other application without coming through the Windows. And now some companies are thinking more advanced methodologies where there are before coming to company's website to go through another website. Like, you don't need to know all this technically, but remember, this is an interesting word to have a multiple defense model of cyber security. If you ask from any cyber IT expert, they will tell you what this is. At least be aware about the terminology from a control and governance perspective. Right. And then how they do regular audits is a key area. For example, you can ask whether internal auditors give any coverage on the cybersecurity auditing, phishing attacks, things like that, and awareness given to users. Those are critical cyber controls. And remember, this is in your corporate governance code. That is why it becomes a syllabus topic, right? And risk management. A hot backup site is a site where you can just go and operate, right? A fully operational off-site center that is equipped with the necessary hardware, software, and networking to straight away take on. But why this was not available is a question, right? That is where you need to test those backup on a regular basis and do a drilling. So remember, keyword there is drillings you do, right? So like that, cyber is a big topic. So my question to you in the exam, what are some of the best practices or some of the changes in terms of the corporate governance you need to bring to strengthen the cyber risk management of this company? So what are your answers? Starting from the CISO appointment, from the education section number 2, multi-layered internal control process, where you bring various security control, not just traditional firewalls, and then the audit in the 4th part, right? And those are the answers. And I think I covered this slide already. I think that's pretty much what I want to say. I had some slide on the data. Now is the time for questions. So I have largely covered. And what I didn't go through one by one is I don't want to waste your time by reading the case study, students. So, but go through specifically on the board profile and that connect to the board diversity and question like that. I told you I will give you possible exam question. One is evaluate, please write down, evaluate risk of material from the given information, evaluate the risk of material misstatement by looking at both financial and non-financial information that's there in your pre-seen, sorry, in the syllabus as yellow. And look at many new LOs that have not new LOs, many unpopular LOs that have not been regularly tested, adequately tested in the exam, especially those 4 roles of the board and audit committee's new responsibilities, right? Listing rules, those are really topics that I already emphasized. So on the Data Protection Act, I already spoke to you, but this is a quick overview within a 5 minutes, right? So the data controllers are the companies, right? It's about the personally identifiable information. Maybe your employees, maybe your consumers, sorry, customers, maybe your suppliers, right? You can only process for lawful purpose. Don't ask unnecessary information, minimize it, store them accurately, give access. These CIA control are very important. You have to ensure integrity of data and confidentiality. They are not leaked to anybody. Accountability is totally about corporate governance, right? Who is the compliance officer and how these issues are being governed at a board level, right? And what are the controls, especially on the control. Remember, policies, whether company has a data protection policies, the training and awareness, auditing, these are very easy for you to remember. Few general points, it is there in the act, by the way. And technical controls, this comes under your IT control. Access control is the key. Security controls as to who has access. Remember, in your case study, lot of personal information like the drivers information, customers, consumer mobile numbers, the date and their feedback, all are personal data. So you have 3 things: encrypt them, right? Convert into a form that others can't read. And then pseudonymization is where you replace personal with a dummy data, fake, that no one can read it, right? And anonymization is removing all the personal detail like birthday, whatever, and others can't see that. So this is critical from a data protection perspective. Now is the time if you have any question. I think although I say 1 hour, it went beyond 1 hour. Right, so what are the questions? Other than asking presentation, I am always willing to share, right? So we'll share. And my request to you is plan for few exam questions, right? And write answers now. Don't do any other work, right?